Well, let us move on to Brett last but not least, looking at the shifting U.S. policy kind of away from renewables and narrowing in on nuclear segment after the POTUS signed a executive order to speed up the development of nuclear power. And I had talked last week about kind of a backdoor way into nuclear power through Atkinson Realis.
You got it there, I think.
Yeah,
you
I
got it
don't
that
know.
time.
Atkins Realis, ATRL to play it that way. Now we're going to look at a little more direct way.
Yeah, so as well off of that, briefly talked about how renewables have really been a shift away from U.S. government focus. The Inflation Reduction Act, which is what Biden brought in, had a lot of tax credits and incentives for solar, wind, and renewables in general. And right now, what's passed the House but not passed the Senate in the U.S. would remove quite a lot of those incentives. But whether it goes back and forth and to what degree, that's really unclear at this time. We'll probably by the time this is posted, you'll have a different bill than what is in the House right now. We're recording this on the Monday. So, but what has been a recent winner in the policy shifts with under Trump looks to be nuclear. So a couple days after the solar stocks plummeted, nuclear stocks really surged across the board as Trump signed an executive order to speed up the development of nuclear power with intention to quadruple the country's nuclear power within 25 years. There's quite a few, to say the least, analysts skeptics of that degree, but it is at least supportive environment for nuclear growth. The shift in policy is looking at an overhaul of the Nuclear Regulatory Commission, NRC, a reduced time of regulatory licenses and decisions for construction to 18 months, as well as some other limits. Reevaluation of radiation limits, standardization of applications for microreactors, amongst many other things. And we'll really see how it comes out if it actually comes into proper legislation as well, past an executive order. But it is an area to watch. And nuclear stocks just absolutely surged on Friday after the order. So Uranium Energy Corp, a uranium exploration and processing company, UEC is the symbol, was up 25%. Oklo, symbol OKLO, a small modular nuclear reactor company, up 23%. Cameco, I think that is Brennan's favorite, symbol CJ on the New York Stock Exchange, as we're going to go all off American here, was up at 11.1%, just to name a few. But the company I do want to focus on in this segment is Centrus Energy, symbol LEU on the New York Stock Exchange, was up 21.6%. But those are just a few examples. Effectively, the entire industry and anything even remotely to do with nuclear was up on Friday, and the ones that were focused on nuclear were up big, as you can see from those double-digit increases. I'm really looking at Centrus, and this is, I guess, a my stock, my take, just because I find the company interesting. It's where it's positioned. It was formerly part of the U.S. government prior to its IPO. It's in quite a bit of a niche, as there's only a handful of competitors which are non-public and have some or historic government involvement, and it has long-term prospects, and we talked to them as well in person at a conference in March. So Centrus Energy is a supplier of nuclear fuel and services. The company was spun out of the U.S. government in 1998. The company produces high-assay low-enriched uranium, or HALEU, as well as low-enriched uranium. And it is the only company to produce HALEU within the U.S. with a U.S. supply chain and U.S. technology to enrich the uranium. The company breaks its operations into two segments, a LEU broker business and a CTS segment, which is enrichment and technical services. So an interesting position given the deglobalization policy, especially from the US, that we've been seeing, considering it's all focused within the US, and it's really a US nuclear pure play is what I would really call it as. The stock is trading at $113 a share and has a $1.9 billion market cap. The stock has performed great, not just due to the recent executive order, but over the past year, it's up 122%. So it's just more than the executive orders, where some of those other companies, they weren't doing as well, and the executive order prop them up. But shifting to the financials for Q1 2025 on March 31st, the company had revenue of $73.1 million, up 67%, of which the LEU segment was $51.3 million, up 117%, and the CTS segment was up 8% to $21.8 million. Gross profit substantially increased off the back of that increased revenue to $32.9 million from $4.3 million. Net income as well increased substantially to $27.2 million compared to a loss of $6.1 million, or on a per share basis, $1.60 per share for this quarter compared to a loss of 38 cents in the prior year. But I will mention at this time the company has significant quarterly variations to the contract timing, primarily in the LEU segment. So while it's good to see these high growth percentages, the comparison was generally compared to a lower year. And you need to really take a step back for this company as it relies much more on longer term trends over individual quarters. You just see up and down on a quarterly basis. Looking at a longer term view over the past 10 years, as well as the trailing 12 months, we can just see there's a general improvement. The company went from unprofitable on a per share basis to profitable, and as well you can see the revenue per share, and they've done administration or SG&A cost expense cuts over the past decade, and they've shifted more into a profitable company. So that's really good to see, just as a long-term trend, and the revenues obviously came up on a pretty positive trend. So balance sheet, great balance sheet. The company has cash of $653 million, debt of $457, so net cash position of $195 million. So great to see that net cash. As well, I will note as well, though, they do have a pension and post-retirement liabilities combined of $76 million, which isn't the biggest, but I always do like to highlight that because we've obviously slowly moved away from pension over the last really 80 years. But some of these older companies or spun out of government organizations they do have these retirement or pension liabilities still on their balance sheet. So it's always good to watch out for those, because some companies, which I have seen, a bit of a tangent, it will be a massive pension liability and they end up needing to restructure it, and it can really harm the company for even years at a time. The company, as it does rely on those long-term contracts, it's good to really keep an eye on them, and it's really a key metric for the company. So for backlog, they have $3.8 billion in revenue backlog and this is until 2040. So like I said, very long-term contracts, of which $2.8 billion of that is in the LEU segment. If we do see this proliferation of commercial nuclear, not weaponized nuclear, like what you normally hear when you say proliferation, you should see that show up in the backlog in the coming years as well as decades. And that is really the key metric which you want to be looking towards for a forward-looking metric. So valuations on a trailing basis, the company is trading at a PE of 17.7 times, an EV to EBITDA of 6.6 times. Not exactly cheap after the really surge in price of the stocks over the past year, but the prospects as well has obviously improved for the past year. But I would say that is quite expensive at this time. But given the volatile nature of the stock and due to the speculative nature of really the entire nuclear industry, as well as now coupling with policy, which can be volatile given the administration, there may be periods of time which it becomes more appealing on a price basis, even if all else stays equal. So we'll see how that plays out. The long-term speculative prospects are appealing given the niche positioning within the US enrichment market, having effectively no national competitors. If we do see sustained shift to commercial and government demand for nuclear power, the company could become very appealing. But it is slow growth industry over the long term, and as well, it has lots and lots of speculation embedded in the stock, given the industry at this time. Overall, we will continue to look more in the company as both the company and environment really develop, and just generally monitor for a better risk reward trade-off. And for disclosure, we have no position or relationship with the company.
Yeah, it's a good overview. It was an interesting interview we did in California with the management team, and they explained the business to us on lay terms, which was nice, and to get that explanation and get a better understanding. As far as loosely in that sector, maybe a little, although Atkins Realis, as like reading it right now, has a little bit better valuations, but again, that stock has surged even in the past couple weeks as well. So certainly a heated sector, one to watch, one to see if there is some companies that can play into that. Maybe some Atkins maybe can be a company that we call a picks and shovels to bring it full circle for that sector.